Welcome to the Craig Brock Real Estate Show, helping you navigate through all the challenges and pitfalls related to real estate. Craig is San Diego's real estate investment strategist. And now, here's Craig Brock.
Good morning. Are you looking for a home? Looking for a mortgage? Looking for a solution? The S&P 500 hits 1900 for the first time. What does this mean to you, though, if you're looking for a home? Maybe you need a strategy. Maybe you need a better strategy. Let's face it, the big banks haven't made it easy by any means. Wells Fargo, Ally, Chase. If you've been turned down for a mortgage by one of the big banks only to go to a mortgage broker and find out that you've also been turned down there, it's for good reason. Because Wells Fargo has about 33% of the business here in America, and most of the mortgage brokers actually clear their mortgages through Wells Fargo, even if their name's on the loan documents. I haven't heard anyone bold enough in America to talk about how it really is. How it really is that many mortgage brokers, or even mortgage bankers for that matter, are correspondents of the large banks, which means that they really don't have any of their own money to lend. They have a warehouse line. They're able to draw docs on that particular warehouse line and then sell the mortgage to Wells Fargo. The problem is that if you don't fit inside the box, your loan's not going to get bought, your loan's not going to get funded. If you've already been turned down directly from Wells Fargo, there's no sense in going to a mortgage broker or even a small correspondent lender. It's just not going to make a difference. But there is hope, and that's why we're going to bring in Terry Lewis this morning. He's with Seller Finance Consultants. If you're looking to get into a home for your family, if you're looking for an investment, he has a solution available that no one else is talking about here in Southern California. This is a fantastic solution. And with the changes over the past year with FHA, this is a welcome solution indeed. I mean, let's face it, even though FHA mortgage rates are down about 3.75%, for a 30-year fixed-rate mortgage, by the time you tack on the annual mortgage insurance premium and the upfront mortgage insurance premium, the number looks atrocious. And that's why we want to bring in an expert. Good morning, Terry. Thanks for joining us here on Financial News and Talk on the Bloomberg Network.
Good morning, Craig. Thanks for having me again this week.
Well, we have to have you again because you bring the solution to us when the banks say no. You have a solution that usually says yes, providing that you have some capital. Now, this isn't for someone that has no money. You do have to have a little bit of skin in the game to get a hold of one of these homes. But today is part one, a new part one, of how to get into a home of your own with seller financing. What are you doing out there?
Well, we call this Plan B. So when the banks don't work, as far as all the new regulations, Dodd-Frank, the S.A.F.E Act, just the stringency of FHA. I read an article this morning waiting for the show that the government's actually, with this insurance plan that they have, the mortgage insurance premium that used to be the guarantee for the loan, the government's actually sweeping the FHA accounts. And they've gotten $25 billion of the FHA insurance that the Treasury has swept out of the FHA guarantee accounts, and they're just using it for deficit reduction or whatever. So it's just like they're stealing from our mortgage people that are getting loans. But anyway, Plan B for us is seller financing. And it's basically looking at your seller and shaking his hand and saying, I'd like to buy your home. And by the way, would you mind financing it for me if that works out for you? And we're finding that that's a better way to do this, to buy a home when you have some issues maybe with your credit or the home doesn't qualify.
Well, Terry, this is Unplugged this morning. It sounds like the voice of truth. Here I came on talking about how it really is when you deal with a mortgage broker or even a decent-sized small correspondent lender, one of the lenders that you'll often find in a real estate office like a Berkshire Hathaway, a Sotheby's, or a Keller Williams. They're basically just conduits to get to the large bank, and the underwriting's all the same. It doesn't do some listeners a bit of good if they've had a foreclosure or short sale or bankruptcy or other credit issues. Your situation is certainly enlightening, to say the least. The website is Seller Finance Consultants. So, Terry, I really want to know how this can work for someone that has less than spectacular credit, for someone that has derogatory credit. Let's face it, there's a lot of people out there that have had short sales and they want back into the market because they're seeing home prices appreciate about 12% per year.
Yes, and we feel that it's going to stabilize, and so basically the way it works is I'd say maybe half to a third of the homeowners can get an actual loan now through the normal traditional sources, which would be a bank. So the other half to two-thirds of the population, they have maybe a ding on their credit. You can't even have a parking ticket that's gone to your credit report any longer, and still get a loan. So the criteria for getting a loan is just out of the box. It's just so hard to do. But there's plenty of homes out there that have equity, that are the homeowners are free and clear, and if they're looking at selling their homes, or maybe it's an investment property they have, and cashing out, they're looking at up to 30% capital gains tax and state tax and Obamacare tax. And then they're looking at maybe not trusting the stock market. And if they put the money in the bank, they're looking at a 1 or 2% return on their money, about 70% of it that's left. Well, we find that an alternative is have that seller actually get a down payment from the buyer, a reasonable down payment, and have that buyer pay the mortgage to the seller instead of the bank. And they can get 4, 5, 6, 7, 8%. It's a negotiated item along with the price and the term of the loan. And it's a win-win for both people. The borrower can get a loan that they never would have been able to get, and they're willing to pay, in most cases, a higher interest rate than a 30-year bank loan that's subsidized by the government, by the way, right now. And turn around, and the seller can actually get a decent return on his money that he has in equity in a house, and instead of renting it out potentially, he's getting a bigger check in the mail without having to answer the phone and take tenant calls and fix up properties and things like that. So it's a win-win for both parties, and it really works well.
It certainly does sound like a win-win. Now, that was a lot of information, to say the least. One of the things that you did mention there, Terry, was the government subsidizing mortgages. I believe you're referring to the quantitative easing, the asset purchase program that we've been talking about here for so long on Financial News and Talk on this Bloomberg network. We have seen the government pare back the asset purchases, but let's face it, they're buying everything that can be created right now. The first quarter was horrific for mortgage originations. Look what's happened with Wells Fargo. Look what's happened with even smaller correspondents here on the West Coast. The cash calls of the world, they're dying out there. That's why they're going to payday loans. I don't know who in their right mind would want one of those cash call loans anyhow. Thank God for the bankruptcy code if you're paying 20% interest. But to get back here on the point, Seller Finance Consultants is the website. We're speaking to Terry Lewis this morning, and he's just killing me with all the information that he's disseminating this morning. Terry's indicated that you can't even get a mortgage if you had a parking ticket on your credit report. Well, the scenario there is that we actually have an infamous borrower that came into our office. They ran one of those red lights. A red light camera caught their license plate and sent them a ticket in the mail. Is what happened. The ticket actually went to collection. You're 100% right, Terry. This ticket was on their credit report as a collection. That prohibited them from getting a conventional loan until that was dealt with. Now, thankfully, the FHA is a little bit more forgiving than that. But let's face it, if the coffers of the FHA are being raided by the Treasury Department, It's just a matter of time before they jack up the cost of mortgage insurance again, hence the reason to look at seller financing.
Yep. So it's as far as seller financing goes, it's we're finding so much traction in it now, and it used to be that in the 80s there was 20 or 30% of these of home purchases were actually created by seller financing, where in that instance the interest rates were very high, up to 14% for 30-year fixed loans. And we found, and I was in my early 20s back then, that we could actually find homes. We were looking for homes, not for the homes that that were there, but we were looking at the financing that was in place to see if we could get a seller to carry a second trust deed and then blend the interest rate to make the overall payment lower than a 14% loan. And so people were buying homes particularly and only because of the interest rate that was on those particular homes. And I think we're going to go into somewhat of a market like that moving forward.
Well, it sounds like you must have been a math major, and it's going to take a math major to really determine how to make that work. Thankfully, we have the association with Terry Lewis this morning. SellerFinanceConsultants.com is the website if you'd like to know more about this strategy, if you'd like to get into a home of your own, or maybe you've heard about strategies that you can pick up investment property without having to go to a bank and obtain traditional financing. This is the missing link. Jerry, I want to get your phone number out there. It's 619-786-5550. That phone number to call you direct, Terry Lewis, Seller Finance Consultants, 619-786-5550. Let's face it, a lot of people just go to a bank for their financing. The banks won't lend to you typically if you already have 4 finance properties. They don't know that I exist. They don't know that a better solution exists, that you can go to a lender that is direct to Fannie Mae and will finance 10 properties. If they don't know that strategy, heck, they can go out and buy 10 seller finance properties. Is there anything prohibiting an investor, one of our listeners, from going out and purchasing 10 seller finance properties?
There's nothing at all. And actually, those particular loans in many cases won't even show up on your credit. Although, when you do apply for credit, you have to disclose that you have that obligation. But typically, they don't even exist on your credit report.
Okay, so that's a fantastic solution, and you don't have to or you're supposed to disclose, but the scenario is that there's other ways, and maybe that's where you want to contact one of our partner attorneys, because maybe there's an opportunity to set up an LLC or a limited family partnership to place some of those properties into those vehicles, so they're essentially hidden from your standard profile. So, of course, that's esoteric thinking. There's a lot to know about that. I won't get into that this morning on the broadcast, but if you'd like to know more about how to set that up, we can help. We're all things financial here at Rancho Financial. Listening to Terry Lewis, that's taken us back to how things were done in the 1980s. Terry, we've got Tesla Motors, we've got Google, we've got Yahoo, Trulia, we've got all these fancy things, these algorithms, and yet we're having to go back to the 1980s when it comes to financing a property. We're having to use the same strategies that were used 30 years ago. What's happening with that?
Well, when it comes to finance, there's no reinventing the wheel. This is just history always repeats itself. And if you look at even our foreclosure crisis, it was happening. I think in my lifetime, I've gone through 3 cycles of boom and bust. And that was a big one back, a few years ago, and we're coming out of it now. But it's not a healthy economy by any stretch of the imagination. And, I've become a history buff, because if you read history, you'll find out what the future holds. And seller financing is part of it. And, we have Google and Tesla and all these new technologies. Back in the 80s, I used to clip newspaper ads, and and we used to have all printed material for our MLS listing. Well, now we get it all online, and it's all instantaneous information. But the bottom line is, everything the way you did it before hasn't changed the way you do it today, as far as financing goes, and even to that extent, foreclosures and short sales and all that. It's the same back then in the 80s as it was 5 years ago, and the same that it is today, and nothing. You can go back in history, and it's all right there in front of you.
It certainly is. I'm sure there's listeners that are wondering, how on earth can you be talking like that? We have stocks at an all-time high, the S&P 500, it's 1900. Well, it's because not everything is firing 100%. Just look at the Russell 2000. We were talking about the Russell 2000 on a program the other day. The Russell 2000 index of smaller cap stocks is down 10% on the year. What's that saying, Southern California? That's saying that small companies don't necessarily want to invest in themselves. They don't want to invest in people. Sure, the big companies do, the large cap companies do for the most part, and they are. But these smaller companies are taking the money and run. That certainly is a catalyst for thinking outside the box. You have to think outside the box. And if you're renting a home, I want you to think outside the box, Southern California. This is a solution. Sellerfinanceconsultants.com is the website. We're listening to Terry Lewis this morning. He has an interesting spin, to say the least. He has a solution if you thought there was no solution. And for listeners who are thinking, no way, there's not properties available in Southern California. Maybe these guys are in Texas if you're tuned in for the first time. That's not the case at all. We're right here in Southern California. There's over 300 properties on the market that are available in San Diego County. There's 500 and some odd properties in the Inland Empire that are available for sale. This is a real solution. Terry, what does the average deal look like? A client comes into your office, or maybe they don't even come into the office. They contact you through the internet or the phone. You have a little bit of a pre-qual process. There is some underwriting, but we're not talking bank underwriting. We're talking about common sense underwriting that's done basically based on your experience to qualify for someone to get into a home. Now, you do have to have a job. We do want to put that premise out there. You have to have a job, you have to have some income, and you have to have a little bit of money to put down, correct?
Yes, well, actually, as of January 10th, the Dodd-Frank Act became fully implemented. And it used to be, back in the 80s, let's say, for an example, that you could basically make a deal with your seller as a buyer, or an agent could put the buyer and the seller together, and you go to escrow, and escrow handles all the paperwork. It's a normal sale, but there's a note and deed of trust, and all the paperwork's done that way. Now, with the onset of the Dodd-Frank Act, in most cases now, with a few exemptions, and that's what we would do, is bring somebody in and have a consultation to navigate through all these laws, which has really created a problem for this process, but it's created a problem for the whole world, including regular loans. So it's nothing that we're not all dealing with simultaneously. But basically, the Dodd-Frank Act really requires this process to be done by a mortgage loan originator like yourself or myself, and it requires a loan application and underwriting and pretty much everything that a regular loan does, only the bank is the seller. And it's a different process, but it's something that's required, and we live with it and we move forward. And if you don't have somebody that's qualified, even mortgage persons aren't qualified necessarily to do this because it's a different process, then you could be getting yourself into trouble. That's why we like for people to come in and talk to us first.
Now, there is a caveat there. There's an ability to repay. It's imperative to understand that if you're thinking about this strategy. It doesn't necessarily mean that you're going to be looking at line 37 really critically, Terry. It just means that if someone is self-employed, they have a Schedule C. Let's say that they have $90,000, $100,000 there in income at the top of the Schedule C. Whatever it might be, they have write-offs. They have vehicles, they have telephone, they have different things that they do, travel. You're not that concerned with the bottom line on that Schedule C. You just need to see that they have income, that they have cash flow. That's really the test here, isn't it? It's not getting down to that bottom line on the Schedule C like the bank, like Wells Fargo or Ally's got to do. And if that bottom line doesn't fit a 43% DTI, the bank's going to say, I'm sorry, you're basically out of luck. You can't have the house. Things are done different when people contact your office at Seller Finance Consultants, correct?
Yes, exactly. Now, with the ability to repay, what we're required to do is take the buyer's information, their income, credit, and collateral down, which is the down payment, and actually verify it, and then give it to the seller who is becoming the bank. And the seller actually approves the loan, so to speak, or they accept the all those documentations. So we're a middleman that's taking information, verifying it, and giving it to the seller, who ends up being the bank. So the seller makes the decision. It's not like there's a law that says you have to have a 43% back end ratio, and otherwise the seller can't do the loan. It's a decision that the seller makes with proper information. And really, that's the process of seller financing in a nutshell.
That's a process that can be quite favorable. Terry, we just have about a minute here to go, but I just wanted to comment, for listeners that are going into Qualcomm or Viasat or CareFusion, chances are you're going to be contacting my office for your mortgage pre-qual, to buy a house, to refinance. But if you've already been to a bank and you've been turned down, or you've been turned down by one of these mortgage brokers, or even a decent-sized correspondent that you might have heard on the radio, it seems like you can't hardly turn the radio on without hearing about somebody peddling a mortgage. There's a better way. And the way is sellerfinanceconsultants.com. It could make all the difference to get you into a home of your own. If you just filed your taxes here this last month and you didn't have any deduction there for interest, you want to check this out. Well, Terry, really do appreciate your contribution this morning. I know you're going to come back this week and talk to us about how this can work for sellers. If you have a home that's underwater, you have the solution for them. Can we get your contact information and what's coming up in the next show?
Yeah, absolutely. So the phone number for sellerfinanceconsultants.com, and that's our website, is 619-786-5550. And Craig, thanks for having me again today. And next, I think tomorrow we're on, and we're going to talk about sellers, how they can benefit from this.
Well, you better believe it. Sellers need to hear from you, Terry. Thanks for your contribution this morning.
And thank you.
And I'm Craig Brock with Rancho Financial, all things mortgage banking, located right off Interstate 5 and Encinitas Boulevard. Easy to find, easy to call. 855-900-EASY. Have a fantastic day.